Market, the fraudulent market, the trader creeps tonight. In the market, the fraudulent market, the trader creeps tonight. Cue that wind effect. You know what time it is, people. Listen. Bring it in. Bring it in. Listen. All right, bring it in quickly. Listen, we're gonna try to have us a little quick one here, just a little quick little update, guys. Obviously, same thing we were running with yesterday. You can do a lot of what I realized about the fraudulent plays that we are in with our retail sagas is that there's a lot of talk and malarkey they push out, but the numbers are always, not gonna lie. Guys, we got an increase on our days to cover, as well as some other keynotes. But let's tap that in first with a quick little video of our favorite Charles Payne here, where I think his name's David Seidel or something like that. Basically talking about the red flags that are coming up. Guys, I don't personally believe that they're gonna let this debt ceiling thing happen. I mean, it would just be a spit in the face of everything that's going on, or spit in the face of all the bailouts that they've already done. Now, if they aren't letting these banks go down, then that would just be the most backwards thing. So, like I said, I feel like it's just a ploy and a push to cause what they call strife and fear in the market, but I don't feel like that's an actual true thing. And then also I got when I was looking at stock plays today, I was like, the entire market is moving basically up under the same ebb and flow now, which is crazy. Like, I mean, as far as like same dip, same peaks, all of that, no matter what the sector is, all that stuff. We're gonna tap into that quick, but let's get into this video here.
All right, face it, right? It feels like this market has been on the cusp of a breakout for at least a year. Here's the real deal, though. This current big hurdle, 4,200 on the S&P 500, was actually established almost 2 years ago. Remember, support becomes resistance. So you had support here, you had support here, then you had support, which gave way. We tried to break out once. We broke out for a second there, broke out there, and now we've been playing this game for a real long time. 4,200 has been embedded. It is the key resistance point. And I'm going to bring in now Market Scholars co-founder David Settle. And David, two questions. First, if we clear this hurdle, how much upside could we get initially? But if we keep bouncing against it and don't break out, how much of a pullback would we be looking for?
Sure, yeah. If we clear this hurdle, really, really important hurdle, as you mentioned, you can see we had multiple attempts at it. If we can get above it, then we're looking at past those August highs of last year up to about 4,400 would be kind of that first layer of the next resistance. But if we clear this hurdle, it should be all systems go from here. But if we don't, then we're still stuck in this range. Right. 4,200 to 3,800 with 4,000 right in the middle. So you're looking to pull back down towards, at worst case scenario, that 3,800 level before you hit some major support.
Right. That'd be a big pullback right there for sure.
And personally, guys, I believe that, and this is why I keep telling everybody to get into building your portfolio of having your long terms and then also having your gambling or your day trading, your swing trading portfolio. I personally, and I made this mistake coming in. It's just y'all can learn from my mistake, but also at the ultimate time, you got to learn from your own mistakes as well. And like I said, we call them lessons, not really a failure, but lessons. But I learned that I had to separate those accounts, one, and two, you got to kind of understand right now, with all the FUD that's being pushed in the market, I understand that big money is scooping up and gobbling this up. I was up there cheering as I watched Tesla bust up to 195 just to follow the same path what we did with AMC, which I'm going to tap in and just kind of show y'all. Y'all tell me what y'all think when we look at the charts as far as like how every play, I mean, even my day trades that were up 200%, 100% that were following these same patterns. It's kind of crazy, but the time is now to be loading in on this, but I don't think that the market makers are going to allow this to run past 4,200 right now, which is why I know this is a load up zone. And we're talking with our family. There's going to be deterioration in other sectors. That financial sector, don't let them lie to you and tell you that's all good. Housing, commercial housing, retail, they have not had their levy to boom, and then even some parts of tech haven't. But what I do lean into is those with high pricing power, like Tesla, Nvidia, Microsoft, right? These are places where even if you're buying it right now, this is something that used to be dollar cost averaging in. Like a strategy would be, if you have a certain amount of money, take 10% of it, 15% of it, 20% of it, and break it down, whatever your money is, and then dollar cost and buy into these. I'm not recommending you. That's not what I'm saying, of course, any financial advice. I'm not saying go in there and put all your cash in right now, but what I'm saying is this is a good point now to be adding in. I've been adding in since I saw 120 in Tesla. I said, oh, hell, I have to. I said I could not make that argument. It's proven good now, but like I said, I'm also prepared for if it does go down through dip, because like I said, they're trying to push max fear into the market with this debt ceiling. And then we got the Fed rate hike that I know is inevitable to come.
And of course, there'll be the disappointment that goes with it. Now, one thing everyone's talking about and everyone's concerned about is the lack of participation. You like to look at names at their above their 20-day moving average. Right now, it's about 45%. Is there a magic number that you want to see in terms of the same tide lifting all ships?
Oh, yeah, getting up to at least above 60, if not above 80%. You notice the peak there in April did get above that level, right around that 80% mark. There's been multiple, the August peak, the February peak, all got to that level. But clearly this one's just not. And that's a big red flag for this market to get to where it's at right now.
The hottest index, it's got to be the NASDAQ 100. It's a beast. We know it's packed with all those mega cap names. It's breaking, it's near a key breakout point to me. It's like, you know, because people are grappling with
that NASDAQ, baby. That's that tech. That's that Tesla. That's that NVIDIA, that Microsoft. Guys, they've got AI. We've got the electric grid. We've got the release of new cars. It's all pushing this. This is why I'm like, if there was a safe hold for your money, crypto, XRP, Bitcoin, Ethereum, but it, as well as holding stocks. And what I'm about to get ready to do next after, because like I said, I'm about to hit like a decent cap of shares for my XRP. I got to get add a little bit of Bitcoin, but my next thing is I'm gonna get just a small amount of gold, right? But I'm also got my stock rolling. I feel like if you're one to be fully hedged, you need to be in every sector, because obviously we don't know what's going to prove to be the best thing, but obviously having a little bit of money in everything is the best way to play it. But what I'm noticing with this NASDAQ and those plays is that the NASDAQ is holding up the market, believe it or not. And I just know that for things that what people want to tie into, the most lore, the most FOMO, the most media is going to be on the NASDAQ. That's where I'm feeling like your money is going to be the safest during this time period. Like Meet Kevin was saying, they got these 4% bond yields, 5% bond yields, where for 5 months you've been holding your money and you've only made 2%. But now, had you been in NASDAQ, had you been in certain places, Tesla, NVIDIA, you know, you'd be up 15, 20% on the market. NASDAQ is up, I think, 20%. I know, so you're missing out on money if you try to play this game, a scary game. Warren Buffett said it best: when others are fearful, be greedy. And that's why I'm biting down, because I know with this much fear, either way it goes, this is not going to be the high points. We're not coming in like we did coming in 2020, buying in at the top, and now you're seeing things collapse. This thing has been depleted. This is the time to repurchase.
The notion of should we still be buying this? You know, has the train left the station? What do you think?
Yes, seven companies make up 50% of that index. Those biggest 7 companies. So I mean, we're looking at basically the Magnificent Seven, so to speak.
There you are.
That are leading us to this point. Over the last 20 weeks, they're up 25%, over 25%. That has been a level over that small, that amount of time that typically exhausts a bullish move. So that you can look for some weakness and volatility now because of that, especially considering over the same 20 weeks, the Russell 2000, the Dow Jones are flat as a pancake.
Yeah,
but keep in mind that if we do break up, just like in the late 90s, 25% can get to 30, can get.
What's in the Russell? What's in the Dow? That's what I'm saying, guys. Retail sector, housing. There's nothing good going on with that. Those are the people that's what's about to take the brunt. There's no pricing power. There is no lore. Nobody's worried about buying a house, but you need that cell phone. That's why I'm like, this just all makes sense to me.
Get to 35 and get to 40. And these are the 7 companies that will be leading us up if we do get back up to those new highs on the S&P 500. Go ahead. Sorry.
No, I was going to we got a minute to go, and I want to bring up the Russell, but you mentioned the Magnificent Seven. I just got to get on the record that the original is better than the remake. I mean, I love the folks in the remake, but you cannot beat the stars in the original. All right, I got to ask you about the Russell, because the Russell, you know, listen, it's getting crushed versus the QQQs, but lately it's been kind of beating the S&P. It's up today.
Yep.
It was up a little bit last week.
Yep.
I mean, should we be looking to nibble on some of these small cap names right now?
QQQ.
They are just bouncing. They're so extremely oversold compared to these large cap names. They are bouncing up from an extreme oversold position. Again, if we're going to trend higher, you're going to have better performance.
Tech has been levied, guys. Do not forget now. It's not like I'm just preaching this about tech. Tech was the first people to get smoked in this. All the rest of the market and other sectors are just now coming down. Remember now, you had Tesla at 120 because they did that stock split, one, to catch those gains, but two, he got pushed down from 250 to 120, 130. I mean, these got levied. They got smoked.
It's in the larger cap names. That's just the way these cap weighted averages work. But if we're going to start to show any weakness here, then yes, you do want to nibble on those Russell 2000 because they're already down. They've already experienced a bearishness this year. They will hold their value better if the markets do work towards their lows.
All right, David, great stuff. Appreciate it. We hadn't done chart school in a while. We needed to do it. Thank you so much.
That QQQ is not actually a bad investment. I probably will look at it, but I don't know. I just like to be more so in the NASDAQ myself. I know that you get, 3 times gains. You can make a lot of money, but, on the flip side, you can also lose a lot of money on that too. But let's flip down in this, guys. Double tapping in on AMC stock play. Obviously, y'all know what this is. This is barcode pattern. Similar yesterday when there's a little bit of actual price when we start to melt up and it snatches back down. But the craziest part about it was this. Check out that pattern there, AMC. Check out that pattern there. Ain't that funny? Let's see, Apple. MBOT, which is what we're day trading, right? I mean, snatching out, we were up 40% on it. Same pattern. I mean, I went through and I said, I looked up, I said, wait a minute now. I said, we're running on the same. And of course, AMC and these retail players are supposed to be going inverse to the market. One, this is letting me know how dry the market is right now. That money this is how you know how big this thing is actually getting. Money's so tight that even across the board, everybody is up on the same algo. You don't have the same, AMC ain't gonna have the same price movement as Tesla, Apple. They're not gonna have that same price movement. They're not gonna have the same price movement as a day trade pharma stock. That's not how that will move. So I'm already wondering, I'm like, wow, we're sitting up here up under what's seeming now to be the same. They've just got this whole thing on autopilot, which, don't get me wrong, makes me sit back and wonder. I'm like, okay, well, y'all throwing this thing on autopilot because, one, the uncertainty of the market and this debt ceiling thing is got maybe even market makers are scared. Now, of course, this is just my opinion, right? But I'm sitting up here saying, now this is, we don't, like, guys, I know we all rah, and, we want to see people get it stuck to them, but we don't really want that debt ceiling to go. We don't want to default on our payments, things like that. That's going to be like a massive hit. You know what I'm saying? A lot of people aren't prepared for what that brings. Like I said, I think you said it was going to be like a 30 million jobs are going to be lost in the first month or first week of a default. I said, you don't really want that. But what I'm seeing right now is I'm watching real uncertainty. They have markets going on algo suppression. I mean, they're going to autopilot, like, hold on, hey, let's sit back. And that's mainly because I believe there's not that much money, which is what Charles Payne was showing, is that there's not that much money being pumped into the markets right now. Which to someone like me lets me know, okay, this is my time to be buying, but also you want to be strategic about how you're buying. But that's just something to keep on the air. But something to tap in, guys. New all-time high on days to cover. 1135, guys. We're going to 12 days to cover. But now, they wouldn't believe short interest has not flicked a 1%. Not flicked even a 0.5% in the last 6 days, as we went from, they brought days to cover all the way down to 4 while they would smother us down, right? Now we've almost tripled that, going up towards 12. but short interest hadn't changed. Nah, I just don't believe that's how that works, brother man. Double tapping in on our stock tracker. We're looking at 400,000 synthetics that have been brought up at a 57% interest rate, 57% cost bar. Guys, irrelevancy. Like I said, I'm not even looking at these shares. I mean, if you can't clearly see that they're just making up synthetics at this point, I mean, there's no point in keeping track of this. It was at 100,000, it was at 400,000, it was at 2 million. Meanwhile, cost of borrow is raising up. Failed to live is raising up. That's what you need to know for the intangibles to know what's actually going on. Because when they can hold short interest, because all they're going to do is they're just piping whatever they're doing on dark pool. We can't even see what's being done on dark pool, but all that we can see is each day it says 50 something, and then it upgrades the next morning to 63 for the previous day. So 63% of whatever they are even holding on dark pool, which now I personally believe they're taking 90% of these, if not more, to the dark pool. They're shorting 63% of that in the dark pool, which is how you're going to hold a shortage somewhere, because they're just taking those shares offline. Take those offline. So it's not going to report I just technically the fintech because nobody can see it. But it's impossible for days to cover be running up, fails to deliver to be going up out the wazoo, and for y'all to have a 20, and for this not to have crossed 26. This is at 80% cost of borrow, 100% short interest, 150% short interest. That's what we're sitting at, and I know that for a fact. Guys, just looking over here at our failed delivers, I just want everybody to see today we got another $4 million worth of failed delivers that were not covered. Look at all this now. I want everybody to keep tallying track of how many shares they are failing to deliver, but they want you to believe that the price is going to hold at a 502 range and do the same trade pattern. It opens up, starts to run out to 514. Same with Tesla. I watched that account with Tesla. I was like, ooh, breaks out, runs up 102. I was like, not 102. Where's this at? This is showing. I don't know why this is showing this price right here. It was actually 195. Okay, all right, my bad. I'm blind. Okay, 192. 192. Blue. Same pattern. Same thing happened all the way across the market on the board, which I said, I get there's an ebb and flow, but there's no way that just shows that I mean, that's a clear indicator that the market is under autopilot right now. Nobody was selling off Tesla like that after it's running up to 192 at the exact same time that everything else hits that same point and follies out to do the same thing. Oh, that's nonsensical. This isn't a real price movement, but obviously you can see what AMC is so bad that at least with Tesla, let me see what Tesla look like on the chart. Do you see how Tesla, these are still barred down, right? You see how this actually, look at the difference between how these bars are rolling on Tesla and then look at AMC. Just so y'all can see how much of a monster this is, right? This is barcoding. We got up here, what is the same thing that happened, 11, 12 o'clock. Look at this. This is barcoding pattern. What is this? What is this? This is not how a stock moves. Look at this. Wants to go up. Oh, wait, a barcode. I said, guys, not only are they in a massive confinement, but we've got all these things that's popping up, which I told y'all, get ready for insanity. I told you at the beginning of the week, get ready for these next 2 weeks. It's about to get crazy. You got the news about apparently shorts talking about, oh, the reverse split is bad for us. Guys, first off, I just want to put out common knowledge here. One, short sellers don't get a vote. When you're short selling something, you don't count as a shareholder. So you don't even get to vote in it. Secondly, no, that's not how it worked with a reverse split. Short seller would favor a reverse split. That is bringing their how much they are expending down. So that, I mean, all of that's nonsense. And one, I believe that's a plot and a ploy to try to get people to try to lean over to that. Yes, for the AMC. And again, personal opinion, if you are a yes voter and you think this conversion is good for you, you're out of your mind. You're out of your mind. Not only are you out of your mind, but that shows me that you haven't done a lick of looking in the markets. You haven't been a lick of any of these retail places. You haven't been a lick of any of these reverse splits. If you're sitting up here saying that after you've been bedazzled, after you've been toasted strudels and all these other reverse splits, that you gonna come over and you think that this is a reverse split solution. Hell, how did ape work for you? You don't break anything up. The whole premise of this play is the build up of this. This is what we like to see. I like to see days to cover blowing up. I like to see failed delivers. I'm not trying to see somebody do stock splits, reverse stock splits. That didn't help you. That's nonsensical. But I know that 90% of people that come and watch our channel, about our family, know that. But it's still just kind of thing. I just want anybody to go out and believe in that nonsense. Think, oh yeah, maybe a reverse split is good. That's the end of the play. I'm just telling you. Now, I'm a trader. Even if they do that reverse split, I'm just telling you, I'm going to play the arbitrage. I'm going to flip on ape. And I'm going to play a little bit of that. But that's my trading mentality. That's what I've upgraded. That's what I've learned now. Because like I said, there's what you hodl, Tesla, NVIDIA, XRP, Bitcoin. Those are hodl. These are trades. We came into AMC holding because I was talking with one of our family members down there about how AMC, you got to understand, we had plenty of opportunities to make a bunch of money off AMC. All of us held too long. We could have sold long because when we came in, we were fresh. We didn't understand the difference between momentum plays and then what's a true hodl, right? But when I hear people pop up in the comments and be like, oh, you're going to lose with AMC. Hey, brother, we had multiple opportunities to make buttloads of money with AMC, but we were trading the stock improperly. But we're not going to act like there hasn't been numerous times and numerous places. The reason people are here now is because we've seen our accounts shoot up to the moon and then get snatched back down. And you got a taste for it. But I guarantee you this go around that people ain't going to be holding to the moon. I guarantee you that much. I guarantee you if it ran up to $50 now that you'll be taking some off the table. Which is why Adam, Aaron, and all of them are so forced. They can't let any price because they already know, one, this ain't even the same retail family as what it was for. We on nipping on the bud to get up out of here. So they know they let the thing go. Not only are we going to buy, sell, and get out, but that'll leave literally, and that would be the greatest joy if it played down the way. But that would literally leave that hot potato in their hands. Not only would they not have somebody to buy up the shares that they need to sell because AMC retail would already dip, but we would have got our money and left them with the bat. That it would be some momentous things. But like I said, we're watching our play. We're watching move. I'm not concerned with price movement with this stock right now. Like I said, guys, we've been trading in the same exact range. We're waiting for June 29th. And from what I'm understanding, all the emails everybody's sending is coming through. I believe that the judge said something on the premise of extending out the deadline for sending in specific examples of what we meant by objection. So it's possible to mean that June 29th thing get pushed out further. And that June 20, if there's even a headwind of it going further past June 29th, I'm telling you it's going to run. You're already watching what it looks like to be a battered short seller market maker. They're making up things while the numbers can't even correlate. Days to cover going up to 12. What are we going to 13 next? So it would take y'all a week, almost going towards 2 weeks to cover. But you want me to believe that the shortage, which isn't still insane, 25, but we know that they've shorted this float over and over again. Shortage on this 200, 300%. But guys, hey, listen, much love, family. I'm going to let y'all go. Hey, we'll see y'all tomorrow. Hey, much love for all the support. Do not forget the time is now to be investing. Go in those comments. Check out the Ballot Wallet. Check out the Legendary Next. We got a 5% off of that in the description. Guys, do not be scared out of the time to make money. I just personally do not believe that they're about to just let the debt ceiling go when they've been just cutting checks on everything else. I mean, it just wouldn't make sense to me. If they did again, it's going to be the Wild West. Hey, I'm going to be here with your family either way it goes. But like I said, I think now is the time to be kind of accruing and building things up while there's a lot of fear in the market. That's the time to buy. That's when the most successful investors are made. But again, much love. I love y'all. Hold it down. Hold your head on tight. And as you always know, what comes next? Can somebody tell me what comes next? Yes, sir.